Today, I want to talk about one of the easiest to find points of interest or POIs and how to utilize them across two timeframes to find a bias and targets for pullbacks. These 3-bar patterns go by many names: fair value gaps, busy, SIBI, imbalance, whatever you want to call them. They provide an easy to find zone that we can rely on as traders for price action reactions. If this is your first time seeing this concept, you're looking for 3 candles in a row where the wicks of the first and third candles do not overlap at all. The pattern comes in 2 main varieties: bullish and bearish. The direction of the second candle determines the direction of the pattern. The first and third candles can be bullish or bearish in each pattern. They do not need to match the second candle's direction. Let's use the rectangle tool on this example over here, and since it's a bullish POI, we're going to start at the top of the first candle and connect the first point here with the second point being the bottom of the third candle right here. So you can see this overlapped area right here is this point of interest. For the bearish point of interest, we're going to connect the bottom of the first candle to the top of the third candle. This gap left behind here is the bearish point of interest. After we have the rectangle plotted, we just drag the zone out to the right until price comes back to revisit it in the future. Now that you've got the general idea, let's talk about using the POIs to find a bias. I'm going to start on the 15-minute time frame. For the purpose of this demonstration, this is going to be my higher time frame. Let's mark all the fair value gaps we can find within the past couple of days. Specifically, I'm looking for consecutive imbalances in a row going in one direction. Now that we've got the past few weeks of the NASDAQ marked up, you can see that we've been respecting bearish POIs and disrespecting bullish POIs. What I mean by respecting bearish POIs is that once the POIs get opened and traded below, they do not get traded above until the trend is ready to shift again bullishly. You can see here that all these bullish fair value gaps that were being created on the way up have been traded through and closed below for multiple days in advance now, whereas the most recently created bearish fair value gaps seem to be getting respected time and time again. By looking for consecutive imbalances in a row, we're creating a bias through a similar process that we'd use with market structure highs and lows. Remember, higher lows and higher highs is an uptrend, and lower lows and lower highs is a downtrend. It's often advisable to use something like market structure alongside these fair value gaps or imbalances to confirm the direction you're looking to trade in. With that in mind, let's drop down to the entry time frame, in this case the 1 minute, to look for POIs down there. Here on the lower time frame, we want to see fair value gaps form in the same direction as the 15-minute fair value gaps, in this case bearish. Ideally, we'd really like to see price react to a bearish 15-minute POI, then start to form the 1-minute POIs soon thereafter. These POIs we find on the 1 minute are targets for pullbacks. Let's use the replay mode to see if we can get the setup that we're looking for. Price has returned to the 15-minute POI and then immediately started to make 1-minute POIs. This is a perfect example of what we're looking for on the lower time frame. Let's draw out the 1-minute POIs. Now we'd be looking for price to come up into one of these POIs. You have to remember that the 1-minute chart is fickle, so you're going to find a lot of points of interest down here, and a lot are going to get traded through. Remember, fair value gaps and imbalances on the 1-minute chart can be traded through. What I mean by this is price can retrace all the way past a fair value gap and then continue its movement downwards. Closing past the fair value gap does not invalidate the POI for an immediate trade opportunity. Speaking of trade opportunities, let's see if we get one. All right, we get a retracement into our first POI here, and let's see if we get an entry trigger exiting the POI. Well, that's a nice engulfing candlestick, so let's take a short entry. We'll place our stop loss above this first POI and we'll target 1.5. All right, looks like price is consolidating a little bit, but ultimately ends up giving us a winner. How you enter when price retraces to a point of interest will ultimately be up to you, and this is where I recommend that you go out and test things. I like to use price action patterns like this engulfing candlestick, and I also use morning and evening stars to enter after pullbacks. You can use an indicator like the ones we offer at the trading floor, like 3-line strike or fractal frenzy. They're both great for entering after pullbacks, but whatever your entry trigger is, test it out alongside the points of interest to make sure that you're getting everything to line up. In your testing, you'll find many points of interest, and you'll start to learn that they're not all created equally. You'll have to start to develop rules around which ones to start really caring about. I like points of interest associated with breaking structure.